Hello everybody, it's Stockguy22 again. Just going to do a recap of last week's close on the markets. We actually closed quite nicely. Let's start with the Dow first. As you can see here, that last video I did into that Monday and Tuesday when we started to bottom out quite nicely. Okay, that was June 4th, June 5th. We had a nice push on June 6th. Nice continuation into Thursday and Friday. And as you can see, we got very close to the first level resistance that we were talking about. That next big level was around that 12.8. So I want to show you a couple things here on the Dow. One, that I like to use fibs, Fibonacci retracements. And you can see from the last high that we hit in May, the end of April there, beginning of May, and the drop that we had into the beginning of June, right at the lows there, we were just under the 200-day. And I thought that we were bottoming out when I did the video last week. You can see that we pushed up right towards the 38%. We can still go up towards the 50. 61% takes us right around that 50-day moving average. Okay, red line again is the 20-day. Green line is the 200-day. So it's nice that we've come back so quickly. We only stayed under the 200-day for 3 days. Okay, that was on Friday, Monday, Tuesday. By Wednesday, Thursday, Friday, we were back up again. The levels I wanted to look at this week, let me just remove that for a sec. I'll take a quick screenshot. It looks like so far tonight, with those China numbers were pretty good. With the Spain money going out, it had pushed the futures up again, and I'll do them in the morning as well to show you what they're at in pre-market. So you can see nice little tweezers that have formed down here, nice little double bottom that I was calling out in that last video. We had a nice crossover on the stochastics around the same day that pushed us right back up. Okay, and the level that we wanted to watch this week is going to be this 12,600. Okay, if we can push through this, then you can look towards another 200-point run to approximately to 12,800. So that's what we'll be looking at this week if we can push into that. Expect resistance. So if you had positions from the previous week and you want to let them go, that would be a good spot, okay? Especially if you don't trade too far out and you just want to take quick profits, okay? If you want to get a bit more aggressive, then you can go up towards the 13,000 and then above that 13.2, okay? Same area that we triple topped on when we had done the video in the end of April, beginning of May there. Okay, so you can see we were calling for that triple top going on. If we had pushed through, we would have continued up. We didn't. We fell right back. Okay, and you can see even when we broke this double bottom, okay, we continued lower. Okay, so we did push down a little bit further than we thought, but really nice support just below the 200-day. Okay, which is usually a pretty major level anyway. Okay, so you can see that quite clearly on this chart. So see how we almost closed right into resistance into Friday. Next level up, like I said, about 200 points up, 250 points up from where we were on Friday. Okay, so if you need a spot to let go of some positions, that's what I would recommend into that spot there. Okay, so you'd want to see how we open up on Monday. It should be above this spot. If we get to that point, we'll have to see if the futures sell off in the morning or if they continue up. But I'll be doing a video on that as well. Okay, so let's go back to our next video. Our next chart. We'll do the NASDAQ. And again, very similar on the Monday, Tuesday last week. We bottomed out, almost at like a triple bottom right off the 200-day. Okay, so that just all these candles represent the one day's action. So this the NASDAQ had closed down. This had closed up with a nice hammer candle that formed and a nice continuation. Okay, so Thursday we had dropped back, but Friday we pushed up again. So you can see right into that 20-day, but again very similar to where the Dow had gone up to the May highs. Okay, so again let me show you that on there. Take a quick screenshot again. So again, nice support into this 200-day. Resistance into Thursday and Friday into the 200-day and the 20-day. Okay. So what we want to see is a break above this level next week. Again, if you want to sell, sell into the 50-day. Okay, that also coincides to our previous support, which should become resistance on the way up. Okay, further up, we've got that just over 3,050, almost to 3,100, and then the highs right there, just almost at 3,150. Okay, that would take us up to those March highs. Okay, so almost we want to see it like stepping up, almost like into the different levels. Okay, so each level that I'm posting here, it's going to be a resistance level going up. So it was Thursday, Friday. Next level up that we're going to look at this week towards that 2950, 3,000, an obvious resistance just because it's a nice even number, psychological level too, and above that these other two levels. So quite easy to read, as you can see. You should try and do this with all your charts, whether it's stocks or the markets, and it'll give you a nice understanding of where to let go of positions and where to buy positions as well. If you look across here, our support almost coincided with our resistance way back in last October, November. Okay, so not surprising that that's where we were bottoming out. That's actually the level I was looking at as well. I was using more the 200-day that you saw me talk about in the last video, but you can see previous supports, previous resistance coincide. Okay, they just flip-flop back and forth. Okay, and you can see where we crossed over on the stochastics at the beginning of June there, June 4th. Okay, on the Monday. So into the Monday, Tuesday, we crossed right up. We're starting to get a bit overbought into this situation, but we're going to probably shoot up above that into Monday, Tuesday. Okay. So let's look at our next chart. Oh, and one more thing I wanted to show you on this, just to show you the similarity there on these type of bounces and why I love the fib levels. So you take the high, come back to the June 4th low, and you can see we're right up above the into the 38% retrace and above the 20-day. Okay, so is this a resistance level? Yes, of course. Further up, we're going to have another resistance point. Okay, so you never go wrong selling. If you had bought early in the week and you just wanted to take quick profit on a push up this morning, it's a great place to just lock up some nice profits. Okay, so you're always trying to sell into resistance, buy into supports. Okay, sometimes you don't know where you're bottoming out, but understanding the candlestick patterns really does help. Okay, that's why when we did that video early last week, I was starting to see those signals already, and nice that they continued up. You need that news to get you propelled up a little bit higher, like we had this weekend with China and Spain news. And news can always trump the charts too. Okay, so news in this case is going to help us in the early in the week, but keep in mind what all these levels are. Okay, and try and do them for your individual charts as well. It's definitely something that's helped me over the years. Okay, so let's go back to, let's do the SPY. And I already had the fib levels on this one. Okay, and as you can see, again, very similar into the 38%. I'll zoom in a bit. Okay, so it went slightly above the 38%. Okay, using the high and the low. Okay, very close to the May highs is, again, like very similar to the Dow chart. Okay, so that 134 is going to be the key level to watch. Above that, 135. SPY is much easier because you can see the 1 point moves, okay, quite nicely. Okay, and then above that 135, you can see that it could turn around and continue almost like what we did in January, February, March, where you get a nice push above all the moving averages, and it just extends right out. But it'll be easy to see if we do ever break out, because that 142 is going to be such a major level. Okay, but with the SPY, use those 1 point increments as nice levels to the upside and to the downside. Okay, you can see we actually bottomed out just above 127. Okay, had a nice little push into the end of the week towards that 133 plus. Okay, but the key level to watch this week is going to be just above the May highs, which is going to be over 134. Okay, next level up, 135.67 there. Okay, you can see how all these levels interconnect, and you can see how these moving averages, if we do start to push up, they're going to start moving up with the SPY as well. Okay, sort of like what we're doing here. You can see here that all of them were pointing up. We've got the 20-day pushing up, the 50-day pushing up. 200-day was sort of like flat, but you can see these will start to turn back up and spike through. Okay, you can actually see that we almost coincided with a nice top action right when these two crossed over. Some people like to use the moving average crossovers for longer term plays. So you can see from when it crossed over here in December, would have gave you the majority of that move from January, February, March into the end of April, where we almost did a double top. Okay, and so selling here, buying here, and selling here is actually a very easy technique that people like to use as well. And people use different types of moving average. In this case, it's the 50-day and 20-day, but you could use other. You can experiment with other moving averages. Okay. So if you wanted to say, hey, how could I have gotten such a big move from January, February, March? Well, you can see the moving averages give you that. Okay. Let me see if I actually have. There's another technique that I like to use, which are Fibonacci moving averages. I think I might have them here. Here they are. Okay. You can see there's a little technique that when all of these start to cross over and start to point up, it'll keep you into that position for quite a while. I used to have a problem selling some positions a bit too soon, and I found this technique was shown to me by someone. You don't see a lot of people using it, but when you have a lot of consolidation with all these moving averages and then they start to point up, that's when you can get a nice ability to get the majority of a move on a position or the markets themselves. You can see when we started to push back down again, now they're sort of like starting to consolidate together. Not quite. As you can see, it'll probably take till about 136 to get them all consolidated and then to turn back up again. So if we did have another push up above like 142, you'd actually see all these moving averages consolidating and then pushing up. So I'll show you really quick if you want to see what these are. What they are Fibonacci's, and you can actually research this, but what they are, each moving average is 5, 8, 13, and the way you get those numbers is 5 plus 8 is 13, 13 plus 8 is 21, 21 plus 13 is 54, 34 plus 21 is 55, and on and on and on. Okay, and what this technique is good for is it actually lets you know when to buy certain positions. Okay, you can see, like in this case here, let's see our orange line. Our orange line is our 34-day SMA. Okay, and you can use EMAs, whatever you feel comfortable with. The 34, you can see, rarely happens, but when it does, it's actually a really good buying opportunity. The tighter you get, the much smaller the drop is going to be. Okay, so in the case of, let's use really quick Apple. Since we're finished with the SPY, I'll use one as an example with Apple. And you can see how perfect that move was from January, February, March. Okay, I've shown this in the chat a few times. But you can see the if you needed to buy Apple during that drop, a lot of people are saying, well, it didn't drop at all. Well, it did drop. It dropped to some pretty key Fibonacci moving averages. Okay, so which ones are some of the best that it extends to? You can see if it does get to this teal blue, whatever that is, that's a 13-day. So you can see that 1, 2, they give you 3 good buying opportunities before it really peaked out. Okay, never really got down to this yellow one, which is the 21. Once it broke through that level, then you can see it started to retrace back down. Try to get back up, and it couldn't, and that turned out to be the resistance level. Okay, now we're above that point. You can see how the moving averages have crisscrossed again. And if our next big push, that's why we were talking about it last week on Apple, our next big push would be over 600. Okay, as long as we pop through that 580 area. So on that note, let's go back to our normal layout. Sometimes they do look a bit messy, all those moving averages, but if you start to use them, they're actually quite cool. Okay, so if your charting lets you do that, to put multiple moving averages, experiment with that. You can see, similar to the markets, the way we had pushed up on Apple, we're almost coming into almost like a triple top as we got close to this 580 each time. So really nice close on Friday. We're going to get bullish on Friday again with options. I'd lost last week on Apple with mostly on a butterfly that we had done into 575. I should have really closed out part of it pre-lunch and I would have done okay, but I lost out. This week we were looking for a push above 580. We do have some monthly options that expire this week above the 600, 605 and 6 1/4 that we did a debit spread on. So we were looking for a bullish action. I've got a two-way play on this, and the fact that most of my shares on Apple are just around the 600 area because I started buying on the drops back down and averaged down a bit further down. So I've got a pretty decent average. So I actually want to see it over 600 because then I'll turn profitable on my positions as well. I'd look to maybe sell between that 620, 640 on my swing and keep the core going. Okay, but I'll still be doing some options this week. So you can see our fib retrace is quite nice on this. We're above the 20-day. We were hovering quite nicely last week above it for the majority of the week there, even the one day that we came back. This hammer candle was a really telltale sign on the Monday. So it was a really good signal that I like to use. You can see where we crossed over. We actually crossed over above the 50 line. Okay, so not right from the bottom as we did in May, and that's okay sometimes because you'll see that happening even here. Okay, you saw it in February, and as we were leading up into January, February, March, it looked like we were overbought for a long period of time, but we just continued to go up and up and up. So our next big move, I thought we were going to go much higher. There was a nice little cup and handle forming here. You can research what that means. Okay, but it's almost like a little cup with a little handle here. Okay, and I think I went over that in the last video that we talked about. Okay, or I mentioned in the chat. So that's on Apple. Okay, our key levels to watch this week is a push above 580. Okay, and if we do, we should be able to hit 600 plus quite nicely. Also, there's an event next week, this week coming up on Apple. So hopefully they talk about the Apple TV or give us more insight into any new products, maybe an iPad mini. Okay. Okay, so that's for Apple. So as you can see, our key level over this 580 this week is a great sign. Facebook. So let's look at Facebook. Facebook's still quite slow in terms of recovering. What I liked about it, I actually took a shot at it last week. Some of you may know that I picked some up. Just above 27. It did get down to 25 and change. If it hit towards 25, I was going to add a bit more. If it broke through 25, I'd stop out because then it could have gone to 20. So my strategy on this is, for those of you that are following it, you can see that if we do push up, I'd like to get 30 to 33 out of it, maybe even possibly 34. If it did push up through 28, I'd probably add a bit more, just because we got a nice V-shape pattern forming, and so many people hate it. I actually don't mind going against the crowd on certain positions. Like everybody's waiting for 20 on this one to hit. I'd like to see it maybe bounce a bit sooner, and I'm playing it like a lot of the past IPOs I've paid in the past, where let them settle out for a week or two, and this one did, and we started to do a little V-shape pattern. Okay, and that's what I liked about it into last week when I first got in. Okay, looked like it was starting to bottom out, went a little bit further down, not quite to 25. So if it can push up from here, might not expect to see 38 again or over 40 very soon, but we could see even a fib level bounce quite nicely. So 33 to 35, you can see are the fib levels, and that's what I'd be looking at it. But I'd even take even 30 out of it. Okay, so I thought the risk to reward was worth it when I got in, and since it's higher risk, I only did a half a position to leave myself some room in case it washed further down. Okay, so that's on Facebook. Let's also do ES. You can see ES very similar. We did some double bottom action. Okay, these are the minis on my other chart. Okay, some nice double, triple bottom action here into that June 4th again. Nice little hammer candle that formed. Continuation into Wednesday, Thursday, and Friday. We sort of topped out that 1327, I believe this is where we want to see us above. Okay, I believe this is some of the after hours action right now to Sunday night. Okay, so you can see that we'd want to see a push towards that 50-day, which would take us up to about 1340s. If we did head up there, might see some resistance initially, okay, because that was support on the way up. It should become resistance on the way On the way down, it was support. We should find a resistance on the way up. Okay. Try to understand this stuff. It really will help you in your trading in terms of getting in and getting out. If you do futures, it's a good way to analyze this stuff, but also on positions as well and the markets themselves. So that's the reason why I keep sharing all these different charts, because it's helped me, and if it helps you as well, that'd be great. Okay. Here's the oil chart. Okay, and as you can see, a lot of consolidation that we had the last couple of weeks into this 84, 85 area. We actually had the one day we went further down under 82, that June 4th, came right back up. Okay, I'd like to see us back over 90. Okay, and if we do, I should do all right, because I ended up picking some more and doubling up on my position on UCO as oil was coming down. Okay, so initially I bought going into that 86. I left some room just in case we broke through 85, which we did. Picked up a little bit more, and now I'm waiting for it to rebound. Okay, so you can see a lot of consolidation right at this VWAP area. Okay, once we can get above 88, 89, then we're going to break through the 20-day, and we got some momentum to the upside again. So almost looking for this type of pattern again to form. You can see you don't just turn on a dime and go straight up on oil. You consolidate for a few days, 2-3 days, 4 or 5 days here. Here we've done it for a little bit longer than that, but I'm okay with that. Okay. Also, we haven't heard too much from OPEC, which we should soon, that if they end up deciding to start the supply again, or cut back on the supply, we could get a push up. Okay, so I doubt they want to see it under 80 bucks oil. Okay, so unless we get a really major recession again happening, or China slow down, which the numbers were pretty good for China, it should push oil back up for us, with the exception of that one day where we dropped right back. So because we had dropped so far back, that's why I started to get back into oil. So I was a bit soon on the drop down, but I didn't mind at all, because I thought we'd hold that 885 area. Okay, so that's on oil. Next one is the gold chart. Okay, and as you can see, a lot of triple action happening here. We had us drop back in September into January, and again into this May, June. I did not mind holding my gold position, even though I almost got shook out of it, because if we had dropped back, we could have gone under that 1500. You can see we made a nice little recovery into last week and the week before. I actually could have sold over here. I was waiting for a little bit higher to that 1680, 1700. If we do get a push towards that level, I'd be selling my two gold bullish positions, which are GDX and DGP. Okay, one's an ETF, the other one's for gold miners. Okay, so that's on gold. Not going to wait for 1800 unless we really got some momentum and I'm using a trailing stop. But into this level up here, I'd have no problem selling. Okay, I almost sold, like I said, a few weeks ago there when we had hit that 1640s area. Really thought we were going to push up a little bit higher up. Okay, so that's on gold, and here's the euro, and you can see the euro with all the problems they've been having. It also bottomed out at the beginning of June, there, June 4th. So a lot of this stuff all coinciding together. Definitely well off the highs, okay, from where it was, that 134.5. We dropped right back to just into that 123. Okay, pushed right up into last week. Okay, as you can see, right into previous support. Okay, so that's where our resistance is right now, that 126.5 area where we hit on Friday was the high. So above that point, you can look for 129, 130 again. Okay, if we do sell off again, let's say the Greece elections don't go well coming up soon, then we could look at another dip back down into 123. But you'll actually be able to see that. Okay, if it does happen, you'll see a drop under 125, 124.5, and you can go short at that point. Okay. Same like you saw happen here. We came up into resistance, fell back, came up to resistance, fell back. Okay, so see the little patterns that form. So you like to see these V-shaped bounce, whether they're on the bounce point off a low or a top out action. Okay, see, same type of pattern. Okay, this V-shape, and I'll show you on here. Okay, you can actually see what happens. So it's not like you don't have time. You have time on these things to make a decision. Okay, and as soon as it breaks under all the support that we had here, you can see why you hit new lows, okay? Because it's taken out very major levels, okay? So initially some support into this 50-day and then collapses there and drops right back. Make sense? So look for these patterns. These patterns are duplicated over and over again on not just the euro, on oil or gold, but across the board on your individual stocks. So look back at your charts. If you're not seeing these patterns, then it's probably a stock that you shouldn't be trading because there's not enough volume on it. Okay. So I hope this video was helpful, guys. Let me just make sure I didn't have to go over anything else. Okay, I think we've covered everything. Okay, we'll talk to you soon.